Welcome to Facts Not Forecast, your daily edge in the stock market, facts, insights, and opportunities you won't hear anywhere else. Today, we're taking a deep dive into the latest earnings reports from two really major players in the tech world. We've got Zscaler, the cybersecurity leader, and Hewlett Packard Enterprise, the giant in IT infrastructure. We're going to unpack their Q3 and Q4 2025 results and explore what they reveal about this accelerating AI-driven enterprise tech cycle, and ultimately what it could mean for your investment decisions. We've got a stack of fresh sources here, earnings call transcripts, analyst reports.
Right, and our mission today is really to cut through the numbers, provide you with some actionable insights. We're looking beyond just the headlines here, trying to understand the underlying trends, things like AI infrastructure spending, cybersecurity resilience. Both are absolutely critical in today's market, wouldn't you say?
Absolutely critical.
So you should walk away from this deep dive with hopefully a clearer picture of where enterprise IT budgets are flowing and, the opportunities and challenges these shifts present.
Okay, let's unpack this with Zscaler first. Ticker ZS. They just wrapped up what their CEO called an outstanding Q4 for fiscal year 2025. Revenue grew an impressive 21% year over year, beat their guidance, and their annual recurring revenue, or ARR, crossed the $3 billion mark.
Wow.
Yeah, that's a significant milestone for a pure-play SaaS security company. Makes them only the second one to hit that figure.
That $3 billion ARR, it's not just a big number, is it? It's a critical signal, especially when you think about the broader economic uncertainties out there. This kind of sustained growth for Zscalers suggests that even if other IT budgets are maybe tightening, cybersecurity, particularly these advanced zero-trust solutions, remains a really high priority spend, non-negotiable almost.
Right. It underscores a fundamental shift in how companies are thinking about security, moving past just reactive stuff.
Exactly, toward foundational proactive protection, especially with hybrid work and cloud being the norm.
Yeah, but despite that impressive top-line growth, Zscaler did report a pretty significant earnings per share miss. The EPS miss compared to analyst expectations for Q4, and that contributed to a slight dip in the stock's after-hours trading.
Oh, okay.
So for many investors, this creates a fascinating tension, right? Strong growth, but maybe profitability question.
Absolutely.
Yeah?
I mean, while that top-line growth is usually celebrated, an EPS miss often signals heavy spending, maybe on R&D for new AI features or, aggressive sales and marketing to grab that demand.
Makes sense.
And the market, in the short term anyway, tends to react pretty quickly to immediate profitability metrics. So yeah, long-term growth looks promising. Their guidance shows confidence. But that EPS miss highlights the cost of aggressive innovation and expansion in a really competitive space.
It's that classic trade-off, isn't it?
It is. Invest now for future dominance or manage for short-term profit.
Okay, so this brings us to the AI implications. This is where it gets really interesting, I think. The implications for AI-driven cybersecurity demand seem quite striking here. Zscaler's CEO highlighted an explosive growth of AL traffic. Get this. AML transactions on their cloud soared a staggering 3,500% in the past year alone.
3,500%. That's incredible.
Isn't it? What does that growth rate really tell us about the immediate need for AI-specific security? And how fast are these new threats actually showing up?
Well, that 3,500% surge isn't just a statistic. It's like a flashing red light for security teams.
Yeah.
It tells us two critical things, I think. First, enterprises are adopting AI and machine learning incredibly fast, integrating it everywhere. And second, with that rapid adoption comes a whole new attack surface, sophisticated threats that, frankly, traditional security just isn't built for.
Right.
So Zscaler's data really illustrates how quickly these new threats are popping up, demanding immediate, innovative solutions.
And they're trying to address these directly, aren't they? They mentioned their new AI guard, designed to counter things like model jailbreaking and prompt injection. Can you break those down quickly for us?
Sure. So model jailbreaking, think of it like tricking an AI into bypassing its own safety rules, getting it to generate responses or do things it was designed not to do, basically convincing it to go off script.
Okay.
Prompt injection is a bit different. That's manipulating the input, the prompt you give the AI to make it behave unexpectedly, maybe reveal sensitive info, or even execute malicious code. Both are clever ways to subvert AI systems.
An AI guard is their answer to that.
Is their direct response, yeah. Addresses the urgent need for defenses against these pretty sophisticated methods.
That clarifies those new threats really well. So Zscaler is innovating on two main fronts here, right?
That's right. Two distinct but connected areas. First is security for AI applications. So securing the AI apps themselves, the access to them, protecting the models, the training data, the outputs, all that.
Okay, securing the AI itself.
Exactly. The second area is what they call agent tech operations.
Hmm.
This is about leveraging AI within security operations, CCOPs, and IT operations, ITOPs. Basically using AI to make security smarter, more automated, better threat detection, faster response.
Ah, I see. So using AI to protect AI and using AI to make the security team's job easier,
Well,
essentially.
it's a powerful combination.
And the numbers around this agent tech stuff look pretty strong.
They do.
Yeah.
They're projecting that portfolio to surpass $400 million in ARR in fiscal 26.
Eh.
And their CCOPS ARR already grew over 85% year over year last quarter.
Wow, 85%.
Yeah, that rapid adoption shows enterprises aren't just looking for new AI security tools. They also want AI-powered solutions to streamline their existing workflows. And look, their recent acquisition of Red Canary fits right in here.
Ah, yes, Red Canary. How does that help?
Well, it's key to building an AI-powered Security Operations Center, or SOC, solution. Red Canary brings this agentic AI tech, which is essentially about intelligent automation, bots that can act autonomously or semi-autonomously to detect and respond to threats. Combine that with Zscaler's massive data pool, it could really enhance their ability to automate threat detection and response, which is crucial given that 3,500% traffic surge we talked about.
That makes a lot of sense. A significant upgrade. Okay, let's connect this to the competition. It's a dynamic space, right? We see partnerships, like with CrowdStrike. You've got Palo Alto Networks, Cisco, all very active. But Zscaler's CEO made that pretty provocative statement suggesting traditional firewalls are becoming like mainframes.
He did.
And that they'll eventually be eliminated by zero-trust architectures, especially in branch offices. Are we really heading for a firewall apocalypse?
Well, firewall apocalypse might be strong, but it's certainly a bold statement. It really highlights a fundamental difference in philosophy, doesn't it? Zscaler versus some of the more established players.
Oh, so?
Well, when he calls firewalls mainframes, it's not just hyperbole. It's an analogy for legacy tech, once central, but now maybe cumbersome, ill-suited for today's cloud-first, AI-driven world.
Like a bottleneck.
Exactly. A mainframe was centralized. A traditional firewall protects a fixed perimeter. But today, users are everywhere, data's everywhere, apps are in the cloud. That perimeter is basically dissolved.
Right.
So the apocalypse really refers to that gradual but maybe inevitable shift towards zero trust, where trust is never assumed. Every user, device, app gets verified, no matter where they are. Security moves closer to the user and the app.
So Zscaler's Zero Trust Everywhere strategy covering users, branches, cloud workloads is directly challenging those older solutions and promising not just better security, but maybe efficiency gains too. Can you give an example?
Yeah, absolutely. They mentioned a specific seven-figure deal. A large enterprise replaced its legacy SD-WAN, its firewall-based VPNs, even its OT security.
OT security, like for industrial systems.
Right, operational technology. They replaced all that with Zscaler's integrated Zero Trust platform. And they're expecting over 60% cost savings. That's huge, a massive financial incentive on top of better security.
60% savings, wow.
They also mentioned securing 150,000 devices across 400 locations for a big university. Just shows the scale of the opportunity in replacing older systems.
So what's their outlook look like, their guidance?
For fiscal 26, they're guiding ARR between $3.676 billion and $3.698 billion. That's about 22% to nearly 23% growth. Revenue guidance is similar, $3.265 billion to $3.284 billion, so 22% to 23% growth there too. They're expecting high single-digit net new ARR growth organically, so still a prudent approach, even while they're investing aggressively for the long term.
Okay, so Zscaler paints a really vivid picture of the cybersecurity battleground in the age of AI. Critical, evolving. Now let's pivot from securing the AI explosion. Let's talk about Hewlett Packard Enterprise, HPE, and how they're powering that same AI infrastructure race, building the foundation.
Right.
Their Q3 2025 earnings show a different, but I think equally compelling side of the AI investment story. They reported adjusted EPS of 44 cents, beat the consensus of 42 cents, recorded revenue of $9.1 billion, also topping estimates, looks positive for AI infrastructure demand.
It certainly does, and it really underscores a critical point. You can't do AI without the underlying hardware, the plumbing, if you will. The sources clearly indicate strong demand for servers, especially AI servers, those specialized machines built for intense AI workloads.
Right, those headlines were pretty clear. HPE's earnings beat estimates. Demand for servers was strong.
Exactly. And AI propels HPE's server business. It reflects a genuine surge. HPE's AI systems revenue is beating forecasts. It really solidifies their position as a key player in that high-growth AI server market, and it's driving their overall revenue growth at impressive 11.79%. It signals real enterprise CapEx flowing into AI capabilities right now.
And their hybrid cloud platform, GreenLake, that seems to be a key part of this growth story too, right? But how central is GreenLake really to their long-term strategy, and what are the biggest hurdles they face turning that vision into, high-margin recurring revenue?
That's a great question. GreenLake is absolutely a cornerstone of their strategy. It's not just another product line. It's HPE's vision for delivering IT as a service. Consume compute, storage, networking on-prem or colo, but pay for it like cloud.
The as-a-service model.
Exactly.
Yeah.
It promises substantial long-term revenue, better margins through recurring services. They see GreenLake as central to capturing those high-margin offerings, supporting demanding AI workloads without customers needing huge upfront CapEx.
Makes sense. Avoids massive data center build-outs for customers.
Right, the biggest hurdles. Well, scaling adoption fast enough to offset declines in traditional hardware sales, and educating the market on the value of that true hybrid pay-per-use model. It's a complex shift, both for HPE and its customers.
Yeah, shifting mindset is always tough. Okay, GreenLake is strategically vital, but it's also worth noting the data shows significant insider selling over the past 3 months at HPE. What kind of signal does that send to you as an investor? How do you weigh that against the positive earnings?
Yeah, insider selling, particularly significant volumes over time. It's always something investors need to consider. It can sometimes signal that those closest to the company feel the stock is fully valued, or maybe they're just taking some profits off the table.
Okay.
But it's crucial not to overinterpret it in isolation, right? Insiders sell for lots of personal reasons: diversification, liquidity, exercising options. The key is balancing that info with the company's fundamental performance. In HPE's case, you've got strong earnings, growth drivers like AI servers, GreenLake.
Huh.
That's a counter-narrative.
So not necessarily a red flag on its own?
Not necessarily a bright red flag, no.
Right.
More like a yellow light, something that adds another layer of due diligence for you as an investor, just something to be aware of.
Got it. Okay, shifting to the competition in AI servers. Who's HPE really up against? How do they stack up against, say, Dell or Supermicro?
Oh, it's a fiercely competitive market, no doubt. And each player has its strengths and challenges. Dell's Infrastructure Solutions Group, their ISG sales, they're also seeing momentum. Shows broad enterprise demand. Though Dell has faced some challenges with the high costs of delivering these cutting-edge AI servers, can sometimes squeeze their margins.
Right. These aren't cheap systems.
Not at all. And then Supermicro, another big AI server maker.
Yeah.
They recently saw their shares dip because of some financial control concerns. Just a reminder that even high-growth companies face operational pressures, right?
True. So how is HPE navigating this?
Well, strategically, they're leveraging things like the recent Juniper Networks acquisition.
Ah, yes, Juniper. Big deal.
Big deal. Expected to significantly boost HPE's networking capabilities, which is critical for high-performance AI clusters.
Yeah.
And they expect it to contribute double-digit EPS accretion by fiscal 2027.
EPS accretion, meaning it adds to earnings per share.
That's exactly. Makes the company more profitable on a per-share basis, assuming the integration goes well.
Yeah.
So that strategic buy, plus a sharp focus on cost cuts. It's designed to boost operating profits, net margins, allows them to compete hard while trying to stay profitable in this high-investment AI server space.
Okay, so given all these moving parts, strong AI server demand, strategic acquisitions, but then insider selling, margin pressures, how do you distill the core investor takeaway for HPE right now? What's the most critical thing for listeners to watch in the next few quarters?
Yeah, it's definitely a complex picture, but an interesting one. Analysts are kind of all over the place with price targets, right? $22 to $28, reflecting those different views on their ability to really capitalize on AI versus the challenges. Simply Wallstate, for instance, suggests HPE might be trading at a pretty significant discount to its estimated fair value, around $30, and they forecast earnings growth over 41% per year.
41% growth forecast, that's strong.
It is a strong long-term outlook. But there are risks. Their dividend isn't super well covered by free cash flow, and profit margins are low now, 4.3% versus 6.4% last year. So that's a dip.
Yeah, okay.
Their Q3 adjusted EPS beat, plus their full year 25 adjusted EPS guidance of $1.88 with 92 cents, that's slightly above consensus. So it suggests a cautious but, confident outlook for a company in transition.
So the critical factor to monitor.
For you, I'd say watch GreenLake adoption rates very closely. And watch for evidence of cost savings and revenue growth coming from that Juniper deal. Those will be the key indicators of whether HPE can successfully make that pivot from hardware-centric to a higher-margin, service-led AI infrastructure powerhouse.
That's a really comprehensive look at both Zscaler and HPE. Really helpful. So bringing it all together, what are these two distinct but clearly connected stories, Zscaler and cybersecurity, HPE and infrastructure? Tell us about the bigger picture. Broader enterprise IT budgets, AI infrastructure spending, cybersecurity resilience in 2025. It feels like two sides of the same coin, almost.
I think that's a great way to put it. If we connect this to the bigger picture, both reports offer really crucial complementary insights into enterprise IT spending in this AI era. HPE's strong AI server demand. That clearly signals significant enterprise capital spending, pouring money into building the foundational infrastructure for AI.
The actual hardware.
Exactly. But simultaneously, Zscaler's rapid growth in AI security and zero trust that underscores that protecting these rapidly expanding AI environments is absolutely paramount. It's not an afterthought. It shows a healthy, non-negotiable slice of the IT budget going straight to cybersecurity resilience.
So it's not just build, build, build. It's build and fortify right from the start. It's just the C-suite gets it, that the risks with AI, like those new threats Zscaler is tackling, are just as significant as the opportunity.
Precisely. And Zscaler mentioning a relatively unchanged macro environment. That suggests while the overall economy might be stable, the allocation within IT budgets is seeing this clear, accelerating pivot. A pivot towards AI-driven solutions, both building them and securing them.
So that balance between innovation and security is really defining this tech cycle.
It absolutely is. Enterprises are in full-blown build and protect mode for AI. So for you, the listener, the takeaway seems clear. The AI boom isn't just software magic. It's a massive investment cycle in the underlying infrastructure and the security layers protecting it all. Companies showing leadership in both areas. They're likely the ones to watch as this cycle matures.
Appreciate you tuning in. Until next time, stay sharp, stay patient, and let the market work for you.